Good evening, everybody. Typical winter evening here in Pittsburgh. Not cold enough to be snowing. It's just cold. All right, tonight we're going to kind of observe the obvious, which is what we should, what should be the first steps when analyzing candlestick charts, number one, and number two, making a successful trading system for somebody that's serious about investing. So I'm going to kind of take a little bit of time through this session. We're putting together a big program on how to eliminate your emotions when using candlestick signals. And this has two functions. One, it kind of keeps pushing you toward a discipline where you're using the probabilities that you should be expecting out of a candlestick chart. Because I had somebody email me during the week saying they're having problems. They can see the good patterns, but they can't always maintain a profit in the trade. So, excuse me, we're not going to go too long tonight because my throat's still on the downhill here. But what I'm going to try to illustrate is, number one, we want to kind of project what's going to be going on in the first quarter of next year. And there's two ways we're going to do that. One, by which patterns are setting up for a sector. And two, you've got to kind of anticipate that most of the big money managers around the world are using the last 2 weeks to kind of evaluate what their positions were, how they did last year, and what are they going to do to kind of take advantage of the economic environment to make profits going into next year. So that's nothing more than them having two weeks of analysis. And yeah, that's Chicken Hawk, that's true, is January 21st. But we're already starting to see that reaction. So as we can see in the market, ever since Election Day, we've had this type of move, which means there's a different dynamic in the market. Good evening, Vladimir. So there's a different dynamic in the market. This is being recorded, and yep, somebody might give John some instructions on how to get the sound coming up upright. So the first chart we have up here tonight is the Dow. And we can see whether this has been an uptrend and how long this uptrend has lasted with a very simple prospect or perspective. But as long as we don't close below the T-line like we did yesterday, we're in an uptrend. Today we had a little bit of a indecisive day. So this is a perfect example to show you that prices do not move based upon fundamentals. Prices move based upon investor sentiment and their perspectives. And notice what was happening in their perspective. We've had a couple weeks where they tried to push through the 20,000 mark. Now, is the 20,000 mark relevant? Absolutely not. That's just a number. Because once they go through 20,000, it becomes an irrelevant number. So the more relevant factor is, where are we in a trend? Where are we with the overbought, oversold conditions? And what were we getting up here? We're starting to get a little bit tired. It's not that the 20,000 level was a resistance level. It's just that was a long way to get there. Just doesn't necessarily mean we had to go through. So Does this tell us that we kind of fizzled out? Could be, but the advantage we have, or that everybody should have using candlestick signals, is knowing what each signal, such as a doji, illustrates. And it basically tells us indecision. We also know the simple doji rule. I wish I could have kept it at 20,000 chicken hot. But we know the simple rule of the doji. Prices are going to move in the direction of how they open it after a doji. So if they open it positive, knowing what our signals and patterns are demonstrating to us will give us a much more clear indication of what they're doing. If they open it positive and trade positive, come up toward the top end of this, what do we have? We have a little morning star signal at the end of a flat trading, which now becomes that little scoop pattern. And then there's the high probability of a slingshot effect to the upside. On the other side, if it opens lower, what type of indication is that? They're going to move it in the direction of how they open it. And so there's a good prospect they could sell it off to the same magnitude as this day right here, giving us a bearish doji sandwich, which is clear indication they failed up here, that we should expect some more downside. So that kind of circumvents which way is the market going. Right now we don't know, but we will get good indications based upon what type of signals or patterns develop from this situation or from this level. Kind of the same scenario over here in the NASDAQ. A doji day, if they open up positive and do a morning star type signal, then we've got that mini scoop, which has the possibility of a slingshot effect to the upside. The market is not open Monday. So Tuesday, when you get up, you want to see what the pre-market futures look like. That's going to kind of tell you what the investor sentiment is coming out into the new year. Okay, so what I want to do is kind of how do we anticipate which sectors may be coming out the strongest? Well, if we know what our patterns are telling us, that already gone. Okay, Tuesday 7. Notice what's happening in gold prices. We can see that it based in here. We can see kind of the doji gap up. And where did this doji gap up occur? Right here above the T-line. What do you say about the SQQQ opposite NASDAQ? I don't know. I don't say too much about it at all. Short, same scenario as what you're seeing in the Qs, is that if it opens lower tomorrow, got a bearish doji sandwich, which means the short should have a bullish doji sandwich. For those of you that are new here, you can see the charts are relatively simple. We've got the 200, which is the red. The 50 is the blue, and the 20 is the gray. These are the simple moving averages. And the reason they're on these charts is because every major money manager around the world uses those moving averages to make decisions about their portfolio, when to buy and when to sell. The T line is this black line. It's the 8 exponential moving average, and it has a very simple concept to it. If you see a candlestick buy signal and a close above the T line, stay long until you see a sell signal and a close back below the T line. The 3T line is just a quicker indication that the further away you move from the T line, the higher the probability they're going to. Further away you move from the T line, the higher the probability it's going to come back and test it. The further away you move from the T line, the more effective the 3T line becomes a quicker indicator to tell you when the profit taking started. All right, so if we know that gold is starting to pick up steam, then we can take a look at charts like Nugget, where we can see the pattern. Notice our scoop pattern. A scoop pattern has a scoop here and a long flat handle. So what do we know about a scoop pattern? There's usually a long slingshot effect coming out the other side. So that already indicates that we could be looking at gold stocks going into the new year. For some reason, they're buying gold stocks, so anticipate a slingshot effect coming out of most of these gold stocks. They all have this scoop-type pattern. This also takes into an account of, excuse me, of knowing what happens in a trend. Where do most people sell? They panic sell at the bottom. Notice you've had this big downtrend, they gapped it down. That's when the buying started. Stochastics on here are 12.33. That's nothing set in stone. They just work just one night, probably 40 years ago. I sat down and said, all right, what stochastic numbers work that show the peak and a peak in stochastics, or the bottom and the bottom in stochastics? The standard at that time, 14.55, but that seemed to be a little bit slow. Because I'm a swing trader, I use 12.33. That seems to be most effective. Now, is that the most perfect one? It works well for me. But if you want to just take a night and say, all right, I'm looking at a choppy chart, where can I coordinate the tops and the bottoms? I would start with 12.33 and maybe shift off of that. 13.32, 14.42 or something. Just numbers that would coincide. But 13.33 has made me a lot of money. I'm sorry, 12.33 has made me a lot of money. So if we can analyze a scoop pattern in a sector, and we know what the results of that pattern is, that slingshot effect to the upside, we've got a pretty good indication that you want to be buying gold stocks probably going into the new year, because the patterns are setting up, telling us that's where things are heading in that direction. Crude oil doesn't necessarily, now they don't necessarily have to coincide. And whatever truism that you want to believe, that sell in May and go away, Santa Claus rally, if they're buying right before a long weekend, they're selling after a long weekend. Whatever truisms that you hear that are kind of standard, you don't have to take them as gospel. You can always watch to see what the candlestick charts are actually telling you is going on. So right now, we can see that the bond prices, the 10-year notes, are picking up some steam here, breaking this downtrending channel. So if you're going after some of the or trading the financials, knowing that yields are going down a little bit right now, you can make a better decision. So if we're seeing that crude oil prices are slowly moving up, that means a lot of our recommendations, like CRC, was based on a pattern, in this case a J-hook pattern, starting with a little hammer gap up. So this, again, puts us in situations where when the underlying commodity is working, the investor sentiment is usually going to work in that same direction. CVI, same scenario. You can see the J-hook patterns. We also know the individual stock signals or candlestick signals. A doji followed by a gap up is your best friend. It's usually going to have more upside. If it's going to have more upside, what type of pattern is it setting up? A J-hook pattern. So get a lot of information based upon the signals and straight or lengthen it out into a pattern. The dollar doesn't necessarily, it doesn't necessarily have to be coordinated with whatever's happening out there. I mean, the overall trend is it's moving up, but we saw yesterday where it came down and closed below the T line. And again, we have a very simple rule. You see candlestick sell signals, and also the indecision up here. Then it closed below the T line. It tells you the steam is gone. You want to be out of that trade on the long side. Marcus, they are doing that. We're working with TradeStation right now. TradeStation is the least friendly as far as doing scans. So we're in the process of doing those scans with TradeStation at this point. So there's a few of the formulators, one of my programmers that are working on it, our formulas. When trading future intraday, do you enter with a resting order one tick above or below the first bar, closing the T line? 10-minute chart is better to wait. Oh, Fran, I don't know if I'm intraday trading anything. Let's see if I've got something that would. If I was buying coffee today and I was trading off my 10-minute chart, I'm waiting to see if there's a confirmation. And the nice thing about candlestick charts is you can use any other technique that you know everybody else is watching. For example, a trend resistance level. You can see that this is pretty much a resistance level in here. When they broke it, you knew you had a new dynamic. Same scenario, though, on the sell side. What's our truism about the T-line? The further away you move from the T-line, the higher the probability it's going to come back and test it. So if I'm starting to see this, if I had held this position and I saw it do this, and then I've got up here away from the T-line in the overbought condition on my 10-minute chart, I'm probably taking profits as soon as I see some weakness in here. Because where do you think the price is usually going to move back to? At least back to the T-line. Is it going to bounce and come back up? Don't know that. I'll just take my profits, and if it comes down and starts back up, I can always repurchase. If it doesn't confirm, and then I got out at the right time, took my profits at the appropriate time. Excuse me. You have scans on stock charts. I think so. If it's coordinated with TCNet, yes. They should be there. How do you decide whether to re-entry a previously failed trade? Money or positive handle. Usually if you're buying on a situation, because everything's adding up, your stochastics are in the right place, you're seeing a buy signal, and it fails, it still tells you you're probably still in the right condition, that you're in an oversold area. You just wait for the next buy signal. So if I get in a position, get out, get back in a position, get out, get back in, if I get out the third time, that tells me they aren't going anywhere, move on to something else. Does anybody have the scan formulas for us? I think everybody does on our chat room. Okay, so let me kind of expound on. I had an email again from somebody this week that they could see the charts, they work everything right, but they just can't make money. What's happening? Let me go to a few that. There are chart patterns. There are chart patterns that tell us when we want to be in a trade. You can see the obvious resistance level here. you can see that they had a little doji gap up. When it closed above this level, even though we're in the overbought condition, it tells us there's a new dynamic. They've broken out. We're waiting for the next trend. So there are going to be a lot of times when you might be buying right here, you have to close out here. So part of successful investing is we know what the probabilities are when we see a buy signal and a close above the T line. We also know what the probabilities are that if it comes back and closes below the T line, we want to be out of that trade. So I guess what you have to, as far as your emotional setup is, you've got to realize that probably 1/3 of your trades that you enter are not going to work. And that is the concept that made me the most money in my investing. Before Candlesticks came along, as a stockbroker with Kidder Peabody, my superior analysis would say, all right, if I'm ready to buy, it's because I'm smarter than everybody else, it should be going up. And when it didn't go up, it was because everybody that wasn't as smart as me couldn't see the reason for it going up. So I'd hang on to something and keep going down, keep going down, keep going down. Now I know that every time I put on a trade, I've got 1/3 of my probabilities that I'm going to lose money on that trade. That leaves the percentage of 2/3 are going to trade positive. Now, that trading positive doesn't necessarily mean I'm going to make a big, huge profit. It may mean I break even, or I make 0.3% because it started to fail. When I see something that's starting to fail, I come back out and I go find something where my probabilities are in my favor. So it's not a function of buying and having immediately going up. It's a function of every time I'm buying, I know the probabilities are in my favor, but you got to always remember that term, probabilities. There's going to be times when you need to come right back out of that trade because it didn't work. The probabilities were in your favor, but the guarantee wasn't there. So when you see the probabilities fade away, close it out and move on to something else. Now, the problem that most people have is that ego problem. Is, oops, I analyzed this, was time to get in. Oh, if I get out, it's just that nagging little emotional stigma that I'm a failure, that I picked out a bad one. Well, get through that stigma by telling yourself, all right, that's 1/3 of the probability that didn't work. So close it out, move on to find something that's going to has a higher probability of working. How much leeway do you give a stock to perform as expected before you get out? Usually I want to see it work. Again, there's very simple stop losses. For example, and I'll try to find those examples. Up here, we knew to start taking profits because why? Because we saw in the overbought condition, they gapped it up. And what do we know about investor sentiment? Most people buy exuberantly at the top. So we took our profits. This is, I was showing the options room, that we were buying the calls right here. I think I was buying the January 6 calls, weeklies. We were buying the 99s. I think I paid $3.65 for them. Well, they moved up to this level, and we closed them out at $18.10. But our analysis said we should be still heading higher. But notice what our probabilities or what our risk reward was. We were way up here in the overbought condition, away from the T line. Dang that thing. So what we did was we closed out our open calls with a good profit, $3.65, closed out at $18.10, and we shifted them to spreads, the 120, 125s. So the spread greatly reduced our risk exposure, and we put a lot less money into the trade, so that if it did turn on us, we still kept the majority of our profits. And so somebody asked, well, how did you stay in it today? Because we needed to see that same criteria that we always look for, that we need to see a candlestick sell signal and a close below the T line, which, as you can see, that did not happen. Had it closed down here, we would have closed out all the spread positions. But the fact that they brought it back up above the T line, what's that tell us? It tells us probably the profit taking's over, that our uptrend is still in progress. Excuse me. Okay. So I'm not even getting to anywhere. So part of the, this is getting rid of your emotions out of your trading, is the logic that the further away we are from the T line, the higher the probability you're going to see some profit taking back to the T line. So we were buying because of the kind of the J-hook bobble pattern right here. We closed it out up here when we saw that bearish engulfing after a doji. So very simple. If we saw this doji, what do we know about a doji? It's going to move in the direction how they open it, except we're up here in the overbought condition. So if we're going to stay in, it better open positive and trade positive. If it opens positive, where's the logical place to put a stop? Where it closed the day before, because if it opened positive and came back down through there, what type of candle would it be forming? Forming a bearish engulfing signal after a doji. And why would we be more suspicious of profit taking at this point? Because we'd moved that far away from the T line and we were in the overbought area. So just that alone told us, get ready to start taking profits on any size of weakness. Yes, it was a long way away from the T line. Doji represents indecision, where it opens and closes about the same level. There's your doji shooting star. Very simple rule. If it opens lower the next day, that tells you to close out that position. Where was it likely to head back to? The T line. When can you be buying back? When it comes right back up above the T line. So I have no qualms about closing out a position here or here and buying back here. It used to be that if I closed out a position, I wouldn't get back in because they, meaning the market, wasn't going to fool me and get me back in where they could take it right back down again. But at least now I know what investor sentiment usually looks like and what our patterns look like. So I have no qualms about closing here and buying back here, knowing that I've got more upside. You always say stay in until sell signal and a close below the T line. Do you sell after it close below the T line if it opens lower, or do you close if it looks like it's going to close below the T line? If I can see that the markets are getting weaker. Oh, okay. Thank you. If you can see that the market's getting weaker, that it's kind of rolled over, and let's move it. Let's say we saw this yesterday after the Dow had done something like this. Yeah, I'd probably close out the position at the end of the day, even though it didn't close below the T line. So if I see something, I can't even remember what one we were looking at. Okay, yes. No. Got what we were just looking at. That's a fine howdy do. So I would probably have closed thinking, all right, what's the worst case scenario? They're going to take it down to the T line. If they bounce it back up from there, I can always buy back in. Paul, I helped write some of the formulas for people that were using Heikin-Ashi, but Heikin-Ashi is kind of a vanillized way to look at the charts. Use them mostly for longer term. What I've discovered through the years is the most accurate and most compelling combination is a candlestick buy signal in the T line. That has more relevance. So when I'm doing training sessions for folks that are new to candlesticks, this is the most powerful concept that has made me money. Again, from years ago where I was the worst investor in the world, that if I see a candlestick buy signal and a close above the T line, I can stay long until I see a candlestick sell signal and a close back below the T line, with the caveat the further away you move from the T line, the higher the probability it's going to come back and test it. So take that into consideration, and if you want to put the T line on your chart and see how effective it is, what it basically boils down to is that the candlestick signals are the graphic depiction of what goes on in investor sentiment. And if you add the T line, now remember, the 50, the 200, and the 20 are all moving averages that every major money manager around the world uses as their decision making. The benefit we have with candlestick signals is we can see exactly what their decisions are at those levels. So nobody has the T line on their charts, which basically means when the T line acts that relevant, it's kind of a natural support and resistance level of human nature, kind of a Fibonacci retracement number. So if you combine a natural support and resistance level with the graphic depictions of human nature, when you combine those two, you've got a very strong combination. Let's see, I'm trying to answer all the questions as we go through here. Yeah, I saw that that the bulls are back because I think, yes, the video was trading up $1, over $1. I saw it. Do you place any emphasis on next week's opening range? Do you place any emphasis on next week's opening range? Johnny, I don't know what that means. My emphasis is that if we get up, or if we wake up Tuesday morning, which will be the first day of next year's trading, and the pre-market futures are showing you which direction the market's going, which is usually an indication of what everybody decided going into the next year, yes, that becomes a relevant factor. It means they're selling it off or they're buying it. On the other hand, if you're looking at individual trading entities, on the first day of next year, they're opening up gold stocks higher. That means they're coming out of the chute buying gold stocks. They're probably going to be moving up for a while. Lowry, it doesn't matter whether you're using logarithmic or linear. You're not using those indications to tell you what's happening. You're using the charts themselves. The 50, the 200, and the 20 are all simple moving averages. That's what every major money manager around the world is using to make their decisions. Do you have any candidates for tax loss selling? Yes, we're going to get to a few right now. Not so much tax loss selling, but with this market moving the way it has, that's why I'm surprised to see any real selling going on right now. I would suspect most people are not going to take profits until we get out into next year, because more than likely the tax ramifications are going to be better for taking profits next year. If you are in an uptrend and you hit a large bearish candle that penetrates the T line, but no negative candlestick sell signal occurs, what would convince you to exit the trade? A lower open the next day. So if you have a big selling day and it closes back below the T line, it better open positive and trade positive the next day. The T-line is the 8 exponential moving average. Okay, so let's take a look at what type of patterns we always want to keep an eye out for. Notice this one, again, a lot of these come from our evaluations in the chat room every day. And so before I get too far into this, a lot of people ask us, is there a way that we can test your room? So what we do during the end of the year here is, you go to this link, you can get a free trial to our room. Becky, how long does that free trial last? There's the link. Yes, but Scott, if you do, what you're kind of assuming is that you've got some tax losses this year. Yeah, you're going to take some tax losses of the bad ones this year. However, after a market move like this, I bet you died to donuts there isn't a whole heck of a lot of tax losses going to be going on tomorrow. Said it was free, a free week? Okay. All right, so what we're looking for are the patterns, and this is why we like to find the patterns, because they got two benefits to them. One, for example, we recommended MPET not too long ago, because you've got a big fry pan bottom, and you've got a smaller fry pan bottom. Scott, 90% of traders lose money is because they are usually trading based upon they're trading based upon things that they don't have a perspective or a game plan. Most people, I discovered, buy because they had somebody told them to buy. They didn't have a reason to buy, so they didn't know where it was moving to. When you have a pattern, we know what the results of these patterns are. A big, strong move coming out the other side. So when we identify that fry pan bottom, we can see what we want to be doing right at the place where we should start seeing breakouts. Notice the kicker signal that broke us out into new territory. Well, we're looking for situations where you're looking for buy signals in the oversold area, but a fry pan bottom or a J-hook pattern is probably going to be effective when the stochastics are already in the overbought area. So there's a very different qualification that you're looking for candlestick buy signals in the oversold. You're looking for pattern breakouts usually in the overbought area. So we're looking at this one right now. Look at the big fry pan bottom. Notice right here how they gapped up through this little resistance level. And today they went up through that resistance level. That tells us there's usually probably a lot more upside. Where would the breakout entry be in PET? Notice right here the kicker type signal. And a kicker signal is one of the 12 major signals. Notice how it opened here and closed here. The next day they gapped it open. They gapped it up above the previous day's open and went the opposite direction. So what's your strongest candlestick signal? Kicker signal. And where did it occur? Right at the breakout area. So this is what we're looking for. I mean, this just gets you set up. That where do you start watching for a breakout? Right where the pattern basically started. Today it did a bearish harami, yes. So what do we need to see if we see a bearish harami? We need to see a confirmation. If it opens lower tomorrow, yeah, you take profits, because what would happen? More than likely they're coming back down to test the T-line. Now, if they come down and test the T-line, do we get rid of this chart? Definitely not, because what's our classic pattern? Classic pattern is a fry pan bottom breakout, very strong price move, what's our J-hook pattern? A very strong price move. Half comes back, tests the T-line, and starts back up. We can always buy back in on the J-hook pattern. And we know the qualification of the J-hook pattern is the prerequisite of having a very strong price move. Is the kicker signal a larger gap up? Doesn't necessarily. No, a kicker signal merely says if you see a candlestick or a candle that has opens here and closes here, if they gap it up from where they closed it at or above the previous day's open and go the opposite direction, that's your kicker signal. Whiting right now is one of the oils that's kind of losing a little bit of steam. So you can see what the trajectory is. It's caught sideways. So if you're long whiting, very simple rule, the doji, if it opens lower, you close out the position. To stay long, it has to open positive and trade positive. Peter, no, was it Peter? Johnny, MPET, you could call it a cup and handle, but usually a cup and handle is usually the handle's going to occur right in here. This is basically a top-hand bottom. Hold on to your individual ones. Let me get through. We're not even 1/5 down the page here. So if we know what to expect coming out of a pattern, we know what to expect if that pattern doesn't work. So there was our J-hook pattern, big breakout. Then what type of signal? We had a dark cloud. That told us they weren't breaking out. Close out the position on the weakness. Where was they coming back to? At least back to the T-line. So the prospects of a pattern breakout or a pattern working is extremely high. But we also have the capabilities of seeing which ones don't work and coming back out of those very quickly. So our recommendation on something like FCB was based on the J-hook pattern. Because we can see what happened when it came out of this little scoop pattern. There is that slingshot effect. Then notice what was happening up here. There was our J-hook pattern setup. So if we closed out in here, we can always buy back here. Now what's our prerequisite for holding on to this position? We can stay long as it doesn't close below the T-line. Let's see, we did whiting. We did the gold. So there's lots. So when you start seeing a lot of stocks in a sector working well, especially with good patterns, that pretty much tells you what's happening across the board, that the biggies are buying those. So there's a lot more strength or a lot more credibility to those patterns. This is AU, another one of the golds. We went through NVIDIA. NVIDIA, again, ever since this is your kicker signal. Notice how it opened here and closed here, and they gapped it up. What is the expectation after a kicker signal? Very strong uptrend. How long do we hold on to this position? Until we see a candlestick sell signal and a close below the T-line. So right now, again, I think it was trading at around, it closed at 111.43. Last I saw it was 112.70 or 112.84 bid ask. So still should be in an uptrend. AMD, another one where notice how it came out of the slow curve breakout. And there's our little scoop pattern again. So if you're taking profits, there's our left-right combo. After that, there wasn't any strength. Now we had that doji gap up, little scoop pattern. How long do we hold on to this one? Until you see a sell signal and a close below the T-line. Now, what's that tell us? If they open this trade positive, we're still holding. If they open this and close back below the T-line tomorrow, there's our bearish engulfing signal and a close below the T-line, close out the position. And IONS, another indication of selling. That when you're in the overbought area and you start seeing them gap it up, I hate that thing. that told us we better start watching for profit taking, because when they gap up in the overbought condition, the first thing you want to do is start looking for sell signals. And all right, and you can find the ones that are moving. Mobley this morning we picked out because you had the bullish Harami, you had the gap up, and then you had another gap up today and started trading positive. When they start gapping up, especially coming out of the oversold area, that tells you there's a lot of strength coming into this one. Can you get into AMD if you haven't already? The answer is it's a low reward trade. This one, at this point, has already moved up from this level to this level, up about 30%. And it's in the overbought condition. It's had a big sell signal. So this is more an indication to say you want to hold. I wouldn't be buying here. This is what we're looking for. These type of setups to buy when the pattern is telling you it's just starting. This is an area now where you just hold until you see it's time to take profits. You don't have to be buying at the very bottom. This is telling you, knowing what your pattern is telling you, that even though you didn't buy right here, you still have this pattern. You're right at the breakout area. So if it opened positive tomorrow, I'd still be a buyer. Obviously, I'd be watching to see what it does at this level, but we know what should happen coming out of a scoop pattern. There should be a strong slingshot effect to the upside. So if I was buying tomorrow, I'd be buying on the basis that I want to be very conscious of what happens if I hit the 50-day moving average. So here's another one that you can stay long as it stays above the T-line. However, you also have the visual recognition of when things are starting to get a little bit soggy. In this case, we can see that we're starting to see some selling right here at the resistance level. We had a doji today. Stochastics up here in the overbought area. So what do we need to anticipate, or what do we need to see to stay in this one? Well, we know the simple rule of the doji is it's going to move in the direction how they open it after a doji. So if they opened it lower, I'd take my profits and get out of the trade. Somewhere along in here as we were buying, we know we've got big profits. Now we've got things that are showing us the probabilities are starting to go against us. So if you bought down here and you've got a 40% profit up here, take them and go find another chart that looks like this. Worst case scenario is, yes, it opens flat, you close it out, and you just put a buy stop right up here. Logic says if it comes up through that level, it's supporting on the T-line, and now we're in our next wave to the upside. I'm not trying to buy at the absolute bottom or sell at the absolute top. I'm trying to get the high probability fat parts. Would you do a short to 39? If it started coming back down, yes, and depending on what the overall market. Now, this is one of the banking stocks, so you want to see what the rest of the banking industry is doing. CRR, same scenario. You're in an uptrend, but you had a doji right on the T-line today. What does that tell us? It tells us it has to open positive and trade positive. If it opens lower, we close out the position. So the analysis of when to get in and out of a trade is a function of knowing what type of results we have after a candlestick signal. Westmoreland. Notice started selling off up here. If you closed it out, got back in on a candlestick buy signal, confirmation. Hasn't had it yet. Now you had a bullish Harami and a close above the T-line. So if you bought right in here, it has to stay above the T-line to stay in it. If it comes back down and closes below the T-line, what's it tell us about our trend trajectory? It's still probably moving sideways. You want to move on to something else. Navistar. Again, there's your belt hold signal. What's the belt hold signal represent? They've wiped out a lot of the sellers, so there's very little selling in front of you right now. Tells you your uptrend is probably still in progress. So if you went back long up in here, You stay long as it doesn't close below the T line. ARIA is a perfect example of nice buy signal right at the right place, broke out through the downtrend. It has to stay above the T line. If it opens lower tomorrow, you close out the position, because where's it likely going to move back to? Back to the support level of the 50 to test it a second time. And it's telling you the trajectory of the uptrend has disappeared. Close it out and move on to something else. That doesn't necessarily mean you're not going to come back into that the trade, but it'll be later. Same scenario on AKS. We made lots of money coming out of this breakout area. Closed it here. Closed out some right in here because told us we're starting to see sell signals. But we got most of that profit. If you got back in, there's your left-right combo, telling you should be back out of this trade. Right now, there's no direction to it. So it's got a high-risk situation to sitting in it. So you close out the trade. You go back and you find something that looks more like this. Kelly, I've written 3 books. Profitable Candlestick Trading, published through Wiley & Sons. High Profit Candlestick Patterns, and Candlestick Profits, Eliminating Emotions. You can find them on the website. Any offer? Niles, the only thing we're offering right now is that we're giving everybody a free trial for the next week, just so they can see. Again, everything that we teach in the Candlestick Forum is something you don't have to memorize. It's just very logical observations, and they're the things that you are always told: buy low, sell high. Just common sense put into a graphic depiction. So here's a situation again where we can see the pattern. We can see the breakout through the 50, a J-hook pattern. Where was our next target? 200. So when it gets up to the 200 and you're in the overbought area and you start seeing sogginess, where do you think everybody else was watching? Right here at the 200 to see if see if that was the going to be the resistance level. Once we get up here, then you can flip to your 10-minute chart and say, all right, starting to see some profit taking. What's the 10-minute chart telling me? If it's telling you that it's starting to show weakness, go ahead and take profits. What's the worst case scenario? You wait for it to come back up, and you can always buy in the J-hook pattern breakout. Robert, the options room has more conversation, obviously, with conversation oriented toward option trading, spreads, and there's about 25 people in there every day. It's more oriented toward, well, for crying out loud, pick up the phone. So, the options room, the reason we switched from the option trading over to the options room is because a lot of people are still trying to learn how to use candlesticks effectively. The options room using a different vernacular, I guess, discussing which strategies, so didn't want it confusing everybody. Let's see. On where you buy and sell, not at the bottom or the top. If I'm buying, I'm not worried about buying down here. I'd rather be buying here, knowing that it's confirming the buy signal. I don't necessarily have to be selling right up here. I can be selling here. I want that fat part in between. Do you have any specific criteria for which stocks you consider to trade? That's up to each individual person also, Joanne. Some people only want to trade stocks that they can trade options in. Others want high volume stocks. My criteria is I'm looking for stocks that trade greater than $5 a share and trade more than an average of 200,000 shares a day. The reason for that is when I want to get in and out of a position, I don't want to have to sit there for 10, 15, 20 minutes closing out a trade. I want to be able to sell it and move on to the next one. The reason I want to stay in stocks greater than 5 is because most brokerage firms do not margin stocks less than 5. And when I'm buying a position, I want to get as much leverage as I can because I know every time I put on a position, the probabilities are in my favor that I'm going to be making a profit. So I want to be able to leverage it as much as I can. So here's another one. This is BOFI. And a lot of these, there's your sell signal, but you don't have a close below the T line. So you stay long, as long as this one, notice how this had a J-hook pattern. And how did the J-hook pattern start? With our best friend signal. A doji followed by a gap up. So we just stay long until we see a sell signal and a close below the T line. So this is what we're looking for. These are the signals. There's your shooting star signal away from the T line. Now, on this given day, if you'd been long and you saw it trading way up here, notice where you are compared to the T line. So if we wait for a confirmed sell signal, we may have given up a good 15% profitability. So that's when we flip to the 10-minute chart. I don't know if I can even find it. Apparently this isn't great enough. But your 10-minute chart is going to, and it got way up here. Watch to see what your 10-minute chart looks like. When it comes back down through the T line on a sell signal on your 10-minute chart, that means you're getting out somewhere up in this range. Now, why would you get out up here when you don't have a sell signal? Because you already had the alert that you're that far away from the T line in the overbought condition. It was time to start watching for profit taking. Let's see, IQQI. Did I say that? HIIQ. Another situation, too, where notice how far away we had moved from the T line? Put a safety stop somewhere, which tells you that if it came back down through that level, where was it coming back down? Back down to the T line. So that way you protect a lot of your profits. Now, will there be times where it comes down, doesn't get to the T line, and starts coming back up? Yes. If it does another buy signal, you can always buy back in. But the candlestick charts at least give you criteria for when the probabilities say it's time to take profits and close out a trade. So whether you're trading long or short, we've been short LVS, Las Vegas Sands, because remember, the bigger the signal, the more compelling there's been a change of investor sentiment. But notice what's happening right now. We're in the oversold area with a lot of indecisive trading. So we want to put our stop someplace that says, all right, if it trades back up through here, and let's say we put it right at just above the T line. But if they have enough strength to come up through the T line after trading indecisively in the oversold area, that means that's where the buying came in. We should be taking our profits on the short side. We've been short SSYS. Because notice what happened right at a major resistance level that everybody else could be watching. Our doji, bearish confirmation, closed below the T line. We can be short. What do we watch for? To see what happened at this level. But notice at this level, that candle told us there was no support here, that we're going to the next level. And where's our next level? Probably somewhere down in this trend channel. LVS was shorted. I think we started shorting it when it came down through this level, because there's our little hanging man in the overbought condition, and it came back down through the low. Didn't short a whole lot of it because it was still speculative up here, but shorted more of it down here, and then shorted some more. Notice when it popped up, notice the dojis. When it popped up, it was very indecisive. And what happened over the next couple of days? They came up, tested the 50, failed back below the T-line, and then sold off again. We shorted a major portion of it right in here, knowing that they failed the T-line and we were probably in a bearish J-hook pattern, thinking that our next target was going to be the 200-day moving average. So you don't have to be a rocket scientist. All you have to know is what the patterns are telling you. Weakness right here at the 50, when we shorted ERII, there's our left-right combo. There's our close below the T-line. We're staying short. We're watching to see if it supports here. Otherwise, it's coming back down to this level. So that's the one thing I constantly illustrate to people. Today we shorted Twilio. Same scenario. Look at where your big dark cloud occurred. Right smack dab at the 50. Then there's your double doji. Sold off. We shorted it today. If it breaks through this level, where's our next target? At least down here, and or could be another big move for the downside. So that's the most important concept of candlesticks is it's just common sense put into a graphic depiction of price movements that have occurred the same way in human nature over the last 400 years, and it's going to occur the same way. Human nature is not going to change over the next 400 years. So when we see that bearish dumpling top, notice when it broke this level, where's our next likely target? Probably down here to the 200-day moving average. How far out do you go on option trades? Usually not very far. Usually, very rarely do I trade weeklies, only because I don't have time to watch the weeklies. I'll usually trade the closest month. Right now, obviously, the closest month is January. But if you think a price move is going to occur and there's not going to be a whole lot left to it, you can come into one of the weeklies. Okay. Here's, throw this out. Chicken Hawk also teaches people how to read charts. I'll try that. And BIDA. Look at your evening star signal. Then a close below the T-line. Is there anything relevant about this level right here? Well, you can pretty much draw a line right down through the tops here, which tells us our downtrend is still in progress. Where do you think your first target's going to be? By testing the lows. Where's your next target? By testing this downward trend channel. So, anyways, some of the biggies like Apple. Apple, when it broke out through this little pattern and up through the 50, how long do you hold on to Apple? As long as it doesn't close below the T-line. So recognizing what's happening in a pattern allows you to decide which ones you want to be in and which ones you don't want to be in. Notice what's going on in Amazon right now. Which way is it going? Going absolutely sideways. What type of pattern is it performing? Got this wedge formation. So what's that tell me about a wedge formation? It tells me I don't want to be long or short. But it tells me I want to keep watch of it, because if it breaks out to this side, it's going to have a strong move this way. If it breaks down this side, it's going to have a strong move this way. So even though I wouldn't be trading it right now, I keep it on the watch list to see which way they finally break it out, because I know I'll have a good price move in that direction. Netflix, we kept saying it's going up very slowly, and the more slowly something goes up, the more likely you can have a change of investor sentiment. So you can see what's happened here. It closed below the T-line after a bearish engulfing signal, but still makes this a viable analysis that if you're long and you stayed long, you know that it has to open positive and trade positive to stay in it. If it opens lower, where's your next likely target? Coming back down to test the 50-day moving average. So everything that you see in candlestick analysis, again, is just common sense put into a graphic depiction. So let me go back up here and see if I've missed questions. Price criteria for shorts is also 5 or greater. Marcus, usually I want to see a much bigger volume. The reason you can have access to shorting a stock is because your brokerage firm has enough stock in margin accounts to, whenever you sign a margin account agreement, part of that stipulation is that if you've got stock in your account, they can come and borrow it to give to somebody that's shorting, where you put it back into your account when they cover. So usually a lower price or lower volume stocks, they may not have that stock in inventory in their brokerage firm. So usually I'm looking at stocks that have much bigger volume on the short side. SLG, you can see you're getting to the oversold area right on the 50. Get ready to buy this one, but I wouldn't buy it until it breaks up back up through the T line. If it starts trading lower, I'd probably close it out with it not able to support at the 50. Why would you stay long in Netflix? Didn't we see? I wouldn't be long in Netflix. I've been telling the room that I wouldn't be long or short. There's just not enough strength. The place I'd probably be going long on Netflix is if it broke out through this level. So I haven't been trading. But if you were long, then you'd definitely have to see it open positive. Macy's, you stay short. Notice your bearish engulfing signal, gap down. Remember, anytime you see a candlestick sell signal and then a gap in that direction, that tells you not only has there been a change of investor sentiment, but the force of that investor sentiment is pretty strong when they gap it. So right now, you just stay short until you see a buy signal. At this point, if I was short, I'd probably have a buy stop just above today's high. If it came up through there today in the oversold, or tomorrow in the oversold condition, that's pretty much telling me they're buying at this level. Start covering your short positions. Okay. One thought to keep in mind, if that is 1,000 shares of stock moving up 30%. Yeah. Yeah, you don't have to hit a big home run, but I haven't come across any new jokes recently. Usually I have plenty of jokes. Just haven't been able to find any. Okay, so what we do now is I tell Jim to do the double line. Put in your stock requests and try to keep them to maximum of 2, just because my throat is starting to act up a little bit. So CSX told us today that he wanted to be out of this one. May not necessarily go short. Jim, do the next double line. May not necessarily want to go short, but you definitely want to be out of that position. DTE, same scenario. You should have been out of this one today. If you weren't, it has to open positive tomorrow to stay in it. Let's see, is this Brookshire? I don't know whether I can get it over here. PRA.B. Can't get Brookshire over here for some reason. 3M. 3M is a toughie to trade because it's an institutional trader. You don't get a whole lot of movement. But same scenario, you've got a doji right on the T line. If it opens lower, you close it out. It has to open positive to stay long, but it's just not a very dynamic stock as far as short-term trading. TMK should have been out of this one yesterday. If not yesterday, you should have been out of it today, showing that you weren't coming back up above the T line. You might consider going short on this one, coming back to the 50. Another one that I wouldn't be long or short, Tesoro, just nothing there. At best, you could be going short, but another institutional trader that's not going to give you a whole heck of a lot of price movement. I'll have to read it later, check it out. CF, all you can do is stay long. This was a real good one. We made a lot of money on CF a long time ago. At some point in the past, it had a nice, long, steady uptrend. That was a good while ago. Now you can see it's starting to bottom out and coming back up. There's a big fry pan bottom. So you can be buying this one on strength because of the fry pan bottom. It's not going to give you a real lively move just yet, but it will be in the right direction. Weibo stays short until you see a buy signal and a close back up above the T line. Hold on, let me drink this. Oh. See that? Somebody wants to put the link back in. Yeah, there's it. Oops, no, that was Chicken Hawks. If you want to try the room out, we put out 3 stock picks every day, not so people have stock picks, but so that people can analyze the chart. Where we recommended so they could see why or what the parameters were, the signals and patterns. So again, it's a constant learning curve. CNAT broke out. You can be buying this one on positive trading. If I was, now obviously it's got a lot of volatility, but if it starts trading positive, you can buy it and just put your stop at today's open. It shouldn't come back down through there. Goog, nothing exciting here. As you can see, it waffles, but right now, if you're anything, I wouldn't be long, and I probably wouldn't be short right now. There's just no real direction to Google. Nugget, I'd be a buyer of this one still on positive trading tomorrow. Palo, all you can do right now is stay short until you see a buy signal and a close back up above the T line. Again, the bigger that move, the more compelling your selling is going to be until you see a buy signal. Dib short, you can on weakness. Looks like they've failed at the 50. There's still a gap down here to possibly come back and fill. So I'd short this one on weakness. Goldman was a good buy or a good trend indicator until they close below the T line. Now you watch, and this is where anything that you can put on your chart that everybody else is watching, like Fibonacci numbers, it's not that it's going to move back to those levels. This gives us an opportunity to see where any buy signals are occurring and what levels they're occurring that we know would add confirmation that that was where everybody was stepping back in. We did Apple, ENB. Oh, did I correct the link to the trial? Yeah, that was it. ENB, I wouldn't be long or short. It's in that wedge going sideways. Yeah, the nice thing about the chat room during the day is you've got a lot of people in there that have good experience for years of locating good trades, and it's a good place to ask questions if you're learning candlestick analysis. And the one thing I always tell people is I use candlesticks for my number one criteria and then add everything else to it. If you've got a good trading program already in existence, if you overlay it with candlesticks, it's going to make it that much more clear to see when the buy and selling occurs. NVRO, you can be buying this one on positive trading. Obviously, you want to break this downtrending channel, so you need to see some more bullish conviction. CIA, stay short. The bigger the signal, the more compelling there's been a change of investor sentiment. Facebook has been a toughie to trade. If I was anything right now, I'd be short, but you can also see there's kind of a sideways mode to it. Haven't traded Facebook in a while just because there's not enough movement to it. Yeah, I saw that. Micron needs to open positive and trade positive to stay in it. While we're open, you want to close it out. Tesla. When they break through a resistance level, they usually come back to see if that resistance level is going to act as support. So you definitely want to see this one open positive tomorrow. Otherwise, it's coming back down to test the T-line. And Chipotle, you can see where it keeps failing. This downtrending resistance level. Next target is here and or down here. So I'd stay short on Chipotle. Do Macy's. Macy's stays short. Nordstrom's stay short, but I'd use today's high as my stop. You want to see it come up through that level. Under Armour Class A. Nothing to get excited about here. You can see once it came up here and started selling off, it was coming back at least to the T line, and it hasn't shown any strength then. From there, I wouldn't be long or short this one. That one's not working. UPS, stay short. Again, there's your hanging man, bearish confirmation. The bigger the signal confirmation, the more compelling the reversal is going to be. I would suspect the 50-day moving average is the target. Six Flags, all you can do here is stay long. Not a very exciting stock, but as long as it stays above the T line, you can stay long. ABC, nothing real great here. You can see the fry pan bottom setting up. I'd be more apt to be a buyer if it broke out through the 200. Well, what happened? INCY, nothing. I wouldn't be long or short. Freeport, stay short, but you now have to see what it does right here at the 50. If you're short, you're ready to cover on positive trading, I wouldn't go long until it does come up through the T line. Smith & Wesson, nothing here. I probably wouldn't be long or short this one at all either. No real great direction. You can get ready to short this one again. This is going to move in the direction of how they open it tomorrow. Mobley, we picked out early today with the gap up, at least figure coming up to test the 200. But the fact that they did a bullish Harami, gap up, and another gap up, strong signal tells you there's a lot of buying pressure on this one. GE, not a very good trader because it's so sluggish. Right now, I wouldn't be long, and I probably wouldn't be going short. GE's just not a trader. There's not enough price movement to have your money out there at risk. There's too many other good places to have your money. RSX, this is the Russian, yep, still in an uptrend. There's your classic. Fry pan bottom, strong price move, J-hook pattern. You can be buying this one as long as it stays above the T-line. SGEN, where do most people sell? They sell at the, panic sell at the bottom. If you're short, pick a spot where the buying would be evident. I'd put a buy stop at 55. If it comes up through there, they're bouncing it up to the T-line. Ralph Lauren, that is the same scenario. If I had been short, I would have covered it when it came up through the doji of yesterday. More than likely, they're going to bounce it up to the T-line. If they do and fail, you can always re-short it. AMAC is still in a very slow uptrend. It has to open positive tomorrow to stay in it. Bank of America. This one you can start going short. There's still a gap right here, which would kind of coincide with coming back to test the T-line. ADP, just stay long. ECL. Same scenario. It's going to move in the direction of how they open it tomorrow. IBM. Boy, nothing real exciting here. If you were long, it has to open positive tomorrow to stay in it. Nuance. Stay short till you see a buy signal. Mux. This one you can be buying. The gap up through the 50 and the 200 and breaking this downward trend channel. Look for more upside on this one. TNA, that'd be a toughie. I probably wouldn't be long or short this one. IDT, another one where I'd probably have covered my shorts by now, but I wouldn't be going long. Visa, not a very good trader. I wouldn't be long or short on this one. There's no direction, and when it does move in a direction, there's very little profit potential in either direction. Mag Silver, you can be buying this one, looking for it to come up at least to test the 50. And CHRW. That's one I wouldn't be long or short either. There's no direction to it. The T-line is the 8 exponential moving average. PayPal, nothing. Wouldn't be long or short this one. Marathon, just stay long, but it has to stay above the T-line. Orox. That's a good, clean chart. Oh, what a funny guy. Just stay long on this one as long as it stays above the T-line. I think we did ARWR. You can be buying this one. No resistance until you get up to the 50. And USCR, this one you get ready if you're long. Get ready to close it out on weakness tomorrow. It has to open positive and trade positive to stay in it. And Kate, yeah, I'd look for a 45 degree to come off of here. And the bigger this signal, the more compelling a reversal has started. And Sears holding. Another one that if you had been short, you would have covered it today. You don't go long until you see they can get it up above the T line. Barclays, stay short. Tesla, we did. It came back down to test the the 200, which means it needs to open positive. If it opens lower, it's coming down to test the T line. You don't know whether it's going to come back up. So if it opened lower tomorrow and I was long, I'd close it out and wait for the next buy signal. Dang, I don't know why I keep. Yep, the new year should bring some very good trading opportunities. We went through 4 months of the market moving sideways, not knowing what was going to happen at the elections. Now we can see that there's a lot of sectors that are very enthused about the elections. IMMU, nothing. Moving sideways. UVXY. Did that. If you're buying, use the T line as your stop. MFS, big breakout. Look for a 45 degree to come off of here. Yeah, if you're buying, definitely buy on strength. Use the halfway point of today's candle as your stop. Facebook, if you're anything, you can be going short, but there's not going to be a big percentage move on this one. Watt, another one that you can be going short, but I'd look for the 50 to be your target. The video we did, you stay long as they can't close it below the T line. Bed Bath, stay short, but I would use today's high as your stop. If it comes up through there, your bearish harami is being, or your bullish harami is being confirmed. Baba, nothing here. If you're short, you stay short. Skyworks, nothing. Absolutely sideways. Tiffany's, you stay short. You're in the oversold area, so put your protective stop just above the 50, above today's high. It shouldn't come back up through there. I don't know whether we're going to be able to get this one. No, it won't come up on this service. FWP, nothing here. If you were short, you should be covering it because you can see it's basing. If I was going to be a buyer, I'd probably put a buy stop somewhere up here, like 1650, telling me they finally started bringing it back up. American Express, another sluggish one, institutional trader. You can be going short on this one with the anticipation any weakness is going to be bringing you back down toward the 50-day moving average. Boeing, if you were long, you should have closed it out. You saw the dark cloud type signal, brought it back up to the bearish engulfing. They couldn't get to new highs. That tells you that the buyers or the sellers are taking control. Oh, I don't know if they've changed this. Yeah, they haven't changed it over yet on this service. GBTC is not coming up. Hey, Mav. Yeah, I can't get you're up over here. How about T-notes? Oh, this is the 10-year notes. Starting back up. It's broken this downtrending channel. Good nugget. Right. Nothing here. If you're anything, you stay short. Starbucks. Starbucks, you watch to see what they do at this level. Excuse me. A doji right here on the 200. If they open it positive, you cover your short position, but you don't go long until they can get it up through the T line. AGN, stay long, coming out of a nice fry pan bottom. Restoration Hardware, nothing here. If you're short, you stay short, but I'd use the T line as my stop. I wouldn't want to see it come back up through that level again. Salesforce, stay short, nothing here. CS, Credit Suisse, you're right smack dab on the 50. If you're short, you just watch. At this point, I'd use today's open as my stop. It shouldn't come back up through here after hitting the 50-day moving average. The VIX, you can start buying this on positive trading tomorrow. What sectors are better for buying? Well, I'm looking at the golds right now. I'll probably go after, especially Nugget. Nugget's got some good leverage to it. JH, nothing happening there. AEM, nothing wildly exciting. If it stays flat, I'd close it out, and then you just put a buy stop at 710. If it comes up through there, you're into the next wave. Twitter. Twitter, if you're anything, you're short. And again, you put your buy stop right up in this level. Any signs of strength from here. Excuse me. Telling you that this is the basing area. Gabriel, a 45 degree. Usually after a big price move, usually after a big price move, you'll get a 45 degree. Stay long until you see a sell signal to close below the T line. Oh, did Boeing have one? Yeah, it's kind of, usually after a big price move, you'll have a steady 45 degree. You guys, this one, if it opens lower tomorrow, you close it out because it tells you this level right here was acting as resistance, and they're probably coming back to test the T line again. Wynn Resorts, stay short till you see a buy signal. CCJ, you should be out of this one. I wouldn't be back in it until you see it close above the T line. I wouldn't be short, but I wouldn't be long. Anytime you see a big move like this, usually you'll have a 45 degree, just kind of a steady eddy to the upside. DKL, nothing here until you see some bullish confirmation. So at this point, I wouldn't be long or short. Guild, stay short. There's really nothing exciting about this chart. Pretty much sideways. GATX. Another one that has to open positive and trade positive. Again, big move. 45 degrees. VRX. Nothing here. Nothing here. At this point, I wouldn't be long or short. The SPY is going to open the direction or trade the direction how they open it. Same thing with the diamonds. Donald Clinton. Microsoft would be out of it on a trade. It's just not a very exciting stock to trade because it's your major institution. I'd be doing the January expirations because when you look at a candlestick chart, it's telling you what it's doing right now. So I want to get as much leverage as possible. They could be expensive right now. Or you could do a spread, which is what we kind of discussed in the options room. Which one would be most effective? EMF, the 20-year notes, starting to come up a little bit. Hershey. To stay long as they can't close it below the T-line. And the oil S&P, very slow coming up, but you can buy this one on positive trading tomorrow. Bob, if you email Abraham at candlestickforum.com, he'll tell you how to get into the, or how to sign up for the options. Okay, everybody, have a happy new year. I suspect we're going to have a lot of good trade setups for this coming year because when you got a new administration coming in that's really going to mix things up, investor sentiment is going to change very quickly in a lot of sectors. So should be a lot of money to be made. And fortunately, we can see where that money is going to immediately when we're looking at candlestick charts. So with that, everybody drink a glass of champagne at midnight, and we will see you bright and early Tuesday morning. We'll see you then.